Assalamualaikum and greetings to Dr. Awais. Today, my team and I will be presenting our analysis entitled Financial Statement Analysis of Farm Fresh Berhad and Spritzer Berhad. Before we get started, I would like to introduce the BoxBox team members. So, the BoxBox consists of 7 members, which includes Katerina, Daniela, Evanarisha, me myself, Kaizatul Ikma, Nur Shafika, Siti Ainurina, and lastly, we've got Siti Nur Shazwani. Together, we will be presenting our analysis of the financial performance of Farm Fresh Berhad and Spritzer Berhad.
Now, I will do the quick introduction of Farm Fresh. Farm Fresh Berhad operates in the dairy products industry as one of Malaysia's largest vertically integrated dairy producer. Established in 2009 and listed in 2022, Farm Fresh spans the full grass-to-glass value chain from dairy farming to manufacturing and distribution of fresh milk, flavor milk, yogurt, grow-up milk, plant-based products, and other dairy-related goods. The company operates both locally in regional markets including Australia, Singapore, and Philippines. Farm Fresh has shown a strong financial momentum with rising revenue and net profit driven by product innovation, capacity expansion, and regional market penetration. Spritzer Berhad is a leading Malaysian bottled water manufacturer and distributor operating primarily in beverage industry. Founded in 1989 and listed on Bursa Malaysia, Spritzer is the largest bottled water producer in Malaysia with a strong market presence, commanding a market share above 40%. Its product portfolio includes natural mineral water, carbonated and non-carbonated flavor water, distilled drinking water, and associated plastic packaging products. Spritzer has continued to expand its production scale, invest in automation and sustainability initiatives, and explore new markets including export opportunity. In recent periods, it has achieved a strong revenue and profit growth supported by stable domestic demand and operational enhancements. The purpose of this analysis is to evaluate and to compare the financial performance using the publisher's financial statement. This analysis will examine key financial metrics to assess profitability, growth trend, financial stability, and overall performance within their respective industry.
Today, I will be presenting the financial overview for two Malaysian companies, which are Farm Fresh Berhad and Spritzer Berhad, focusing on their financial performance in the year of 2022. So this presentation will briefly highlight their financial performance, financial position, and overall assessment. As we can see here, in 2022, Farm Fresh recorded revenue of about 501.9 million and a profit of 78.6 million. This shows strong profitability, especially for its first year as a listed company. The company benefited from efficient cost management and strong product demand. Overall, Farm Fresh showed solid financial performance and strong earning capability in 2022. Looking at the financial position, Farm Fresh had total assets of RM 788.8 million and high equity of RM 611 million. This strong equity position mainly came from IPO proceeds. The company generated positive operating cash flow, which shows its core business was healthy. Financing cash flow was also positive due to funds raised from listing. Overall, Farm Fresh had strong liquidity and was financially prepared for expansion. So moving on to Spritzer Berhad. Spritzer Berhad is a leading bottled water producer in Malaysia with more than 40% market structure. In 2022, Spritzer aimed to maintain stable performance while continuing long-term investment. So moving on to financial performance, as we can see here, the revenue for Spritzer Berhad is 433.3 million. and profit after tax is 37 million, and the earning per share is 11.8 cents. So this shows the company's revenue and the profit are stable, that's supported by steady consumer demand and effective cost control. This reflects that Spritzer's strong and resilient business model. Spritzer total assets in 2022 were 601 million with equity of 493.5 million. The company had low liabilities indicating a conservative capital structure. Although Spritzer invested heavily in long term, it still generated strong operating cash flow. Overall, Spritzer showed high financial stability, low risk, and sustainable long-term performance compared to FarmFresh, higher growth but higher risk profile.
Okay, so now I will briefly present the financial overview of FarmFresh Berhad and Spritzer Berhad for the year 2023, focusing on profitability, financial position, cash flow, and overall performance. For FarmFresh Berhad, profitability increased significantly in 2023. Profit for the year increased more than 4 times compared to 2022, and earnings per share also rose. This indicates stronger operational performance, although finance costs increased due to expansion. Farm Fresh total assets and equity increased strongly, reflecting business expansion and higher retained earnings. Operating cash flow remained positive, while investing cash outflows showed continued growth activities. Overall, liquidity improved with a higher year-end cash balance. For Spritzer Berhad, revenue and profits increased steadily in 2023. Profit grew faster than revenue, showing improved cost efficiency. Earnings per share and dividends also increased, benefiting shareholders. Spritzer expanded its asset base through long-term investments. Equity strengthened due to retained profits, while liabilities remained relatively low. The company generated strong operating cash flow and maintained a healthy liquidity position. To conclude, both companies showed strong financial position in 2023. FarmFresh experienced faster growth and expansion, while Spritzer maintained stable growth with low gearing. Overall, both companies are financially healthy and well positioned for long-term sustainability.
So now I'm presenting about the financial overview for year 2024 for both company, FarmFresh and Spritzer, focusing on income statement, balance sheet, and cash flow statement. Firstly, for the income statement for FarmFresh Berhad Company, I can simplify from the table that this company has the revenue increase, the gross profit margin has positive trend, the net profit margin decrease, which means lost money on operating expenses, and their profit increase. Next is balance sheet and cash flow statement for FarmFresh Company. Overall, all the elements in balance sheet and cash flow statement shows the positive trend for the company, and this trends shows the company to continue operating in the future. Next is the income statement for the Spritzer Berhad Company. The overall is revenue and profit for this company is increased. However, the gross profit margin and net profit margin shows the declines trends. For the balance sheet and cash flow statement for Spritzer Berhad Company, the asset and equity shows the increased trend, and the net cash in cash flow for investing activities and cash equivalents shows the decrease. However, the operating activities and financing activities shows the increased trends.
Next, I will present about ratio analysis for both Farmfresh Berhad and Spritzer Berhad. So the first one is liquidity ratio. For Spritzer Berhad, you can see the current ratio moving to 1.75 times, which shows they are putting their cash to work instead of letting it sit idle. Their quick ratio remains steady at 1.41 times, proving they are very safe even without selling any bottles of water. For Farmfresh Berhad, this shows a much higher liquidity profile. Their current ratio of 2.93 times and quick ratio of 2.01 times are well above industry standards. This high liquidity is a result of their IPO funds, which they are now strategically spending to grow the business through new dairy plants and acquisitions. When we look at the net profit margin, Spritzer Berhad has shown a great upward trend, reaching over 12% in 2024 due to better cost control. Farmfresh Berhad, however, saw a drop from 15% to about 7.8%. This tells us that while Farmfresh Berhad is making more total sales, their expansion and material costs are currently eating into their final profits. So next is profitability ratio. Looking at Spritzer's asset and equity returns, we see a very positive trend. Their ROA reached 9.21%, meaning they are using their factories and equipment much more efficiently now than in 2022. Similarly, their ROE rose to 12.22%, which is a great sign for shareholders as it shows the company is generating more profit for every ringgit invested. For Farmfresh Berhad, both ROE and ROA saw declines as they move into an aggressive investment phase. Their ROA dipped to 4.95% because they added many new assets that are not yet at full profit capacity. However, the ROE recovery to 9.13% in 2024 is a positive sign that their strategic expansions like the typing plant are starting to pay off for shareholders.
I will explain the leverage performance of Spritzer Berhad and Farmfresh Berhad. Leverage ratio show how much a company depends on debt to finance its asset. If leverage is high, the financial risk is also high. If leverage is low, the company is more stable and financially safe. For Spritzer Berhad, the leverage level is low and well controlled. The debt ratio is increased slowly from 80% in 2022 to 25% in 2024. The debt to equity ratio also increased slightly from 0.22 to 0.33. Even with this increase, Spritzer still use very little debt. This shows that Spritzer relies more on equity and internal fund. As a result, the company has low financial risk and strong long-term stability. Okay, from Farmfresh Berhad, the leverage level is much higher. The debt ratio increased from 39% to 46% over the 3 year. The debt to equity ratio also increased from 0.64 to 0.85. This shows that Farmfresh use more debt to support business expansions. Because of this, Farmfresh face higher financial risk compared to Spritzer. However, this strategy helped the company grow faster. Overall, Spritzer is financially stable with low risk, while Farmfresh is a higher growth company is higher risk. Next, efficiency ratio measure how well a company uses its asset to generate revenue. In this analysis, the total asset turnover ratio is used. For Spritzer Berhad, efficiency performance is strong and stable. The asset turnover ratio stayed around 0.72 and increased to 0.75 in 2024. This means Spritzer used its asset efficiently to produce sale. The improvement in 2024 show better use of production capacity. For Farmfresh Berhad's efficiency is lower and less stable. The asset turnover ratio dropped in 2023 because the company invests in many new assets. These assets need time before they could generate revenue. In 2024, the ratio improved to 0.63. This shows that the new assets are starting to become productive. So, in conclusions, Spritzer show a strong efficiency and stable, while Farmfresh is still in a growth pace but is improving its efficiency.
Hello, my name is Nur Shafika binti Muhammad Shamizan, and I will present about managerial insight and recommendation of Farmfresh and Spritzer. The first one is for managerial insight for Spritzer. The first one is Spritzer performance. Spritzer has successfully transitioned from steady growth to a high performance optimization phase. The second one is Spritzer profitability. Net profit margin improved significantly from 8.53% in 2022 to 12.28% in 2024 due to effective cost control. The next one is Spritzer asset efficiency. A rising ROA of 9.21% proof management is maximizing profit from existing bottling plants. Spritzer financial stability. Maintain a conservative, low-risk profile with a debt ratio between 18% to 25%, providing a strong shield against interest rate hikes. Managerial insight for Farmfresh. Expansion strategy. Farmfresh currently in an aggressive grass-to-glass expansion phase, prioritize market share over immediate margin. Margin pressure. Net profit margin dipped to 7.81% in 2024 due to high raw material costs and farm acquisition expenses. Growth latency. Asset turnover remains low, which is 0.63, as massive investment in dairy farm and inside scope have yet to reach full productivity. Capital structure. Increased reliance on debt to fund rapid growth that leading to higher financial risk. The next one is recommendation for Spritzer. First one is cost resilience. Mitigate PET plastic price volatility by securing long-term supply contracts and increasing sustainable packaging. The next one is portfolio growth. Expand into high-margin functional beverage to offset regulatory pressure from the sugar tax. The last one is strategic acquisition. Utilize excess liquidity to acquire regional brands and accelerate market penetration outside Malaysia. Recommendation for the Farmfresh. Asset productivity. Prioritize bringing new dairy farm to full production capacity to improve asset turnover and capacity efficiency. Debt discipline. Focus on using operating cash flow for expansion rather than taking on high interest bank borrowing. The last one is supply chain resilience. Increase local herd size in Malaysia and Australia to reduce dependency on expensive imported wool milk powder (WMP).
In conclusion, Spritzer Berhad reflects a mature, stable and efficient business model, steadily improving profitability and shareholder return with low financial risk. Meanwhile, Farmfresh Berhad embodies a high growth but with high risk profile, with a strong revenue expansion but declining efficiency due to aggressive capital deployment. In In summary, Spitzer is better positioned for sustainable long-term performance, while FarmFresh must prioritize profitability discipline to fully capitalize on its growth trajectory.
And with that being said, that will be all from us, the Box Box. Thank you.